Hello traders, how are you doing? Today is again July 13th, Wednesday 2016. My name is Alberto Alvarado, and now is 5 p.m. here my local time. That means it's actually it's midnight GMT time already. No, it's 10 p.m. GMT time. Just wanted to update a little bit what happened today after today's one of my deliveries, webinar deliveries today. That is going to be uploaded tomorrow, by the way. For the ones interested, the links are below in the description box. I was talking about this late webinar about the possibilities of having a retracement in that very big 400 pip rally that we have had from since 2 days ago in the cable. And yes, I just checked, and prices are pretty much around 131, so it almost retraced more or less 200 pips or so. And yeah, I commented something like that in one of the webinars today. Actually, the binary option with expiration on Friday, I closed it in profit beforehand because of the uncertainty tomorrow of what the Bank of England could do, because actually it's a gamble of how the price could react after having the news, because it's really an uncertainty to know if it's going to be a rate cut in which amount. So yes, we decided to close that trade in profit, and was the wisest thing, as I'm checking now. The price retraced almost 200 pips, so it was a good call to close it in profit. You know that being a trader means to be able to adapt to different circumstances. And I don't know if the reaction in cable has something to do with these recent namings in the new Prime Minister cabinet. I don't know if something the markets didn't like. I don't know if this new chancellor is something that they wanted to see. We have to check that out. Although we don't have to get into second thoughts, because as I explained in my latest webinar today, I was explaining the fundamental dynamics in relation with the current levels and the 1.3 and the 1.33 where fundamental resistances so far for the cable. So what I commented is that we could see the price ranging between the 130, 131 and 133. It all depends on how things go overall with this Bank of England policy decision, and we could see the price hovering there. For the ones that are interested more, go in the description box. You will see my latest webinars, both Dukascopy Webinars and Binary.com webinars, so you can check out what I am talking about. So it was pretty much everything that I wanted to say at this moment. Yes, I saw some strange price actions during after all this new namings in the cabinet, and I kind of feel that some price action is indicating us that they didn't like something. Maybe the naming of the chancellor, because there was even talk that maybe Mr. Osborne was going to be kept in that position, but apparently it is not. So also the former UK London governor apparently is going to take the foreign relationships position, and as far as I know, this person is kind of a loved one or a hated one. Is somebody that knows how to arise opposite emotions towards him. So maybe that's something that the markets didn't like. I really don't know. We have to check out, but it's going to be very, very difficult to accurately know if the price action after those namings are really because the markets didn't like something, or just because it's natural price action, since we were hitting a natural resistance after having a 400 pip rally. Having a 200, 100 pip retracement is completely normal and even desirable and even healthy. So pretty much after tomorrow's Bank of England decision, I will be able to completely verify if the price action from today is related to these people, or is a natural adjustment of the markets. Yes, again, I barely commented yesterday that I have a speculation on holding a buying position in cable at the 1.30 with the stop loss at the 1.28. It's in basic words, is entering at the psychological level 1.3. Stop loss is a no-brainer, is the recent swing low. I believe that we have chances not visiting that level anymore unless something really strange happens tomorrow with the Bank of Finland. So for the ones interested in opening that trade, first of all, it's my obligation to tell you that I strongly suggest you not to open it, because if something bad happens in the Bank of Finland interest rate decision, we could easily have a drop of 2, 3, 400 pips just to see it come back. So no matter if you put a stop loss at the 1.28, if the price drops to the 1.26 in a matter of seconds, your stop loss won't be executed, and you will have to deal with a 400 pip loss. So only if you are a very experienced trader this trade goes for. If you are not that experienced, and when I mean experienced, is somebody that's already knows how to already profit every month in the forex markets, because when you get to that experience, you realize that even if you use an accurate stop loss, you need to give some room to breathe to your trades, even considering this extra volatility. So instead of making your risk adjustments according to a 200 pips, it would be wise to make it for a 400 pips. So besides being experienced, maybe you should have a big enough account to make it attractive to position yourself there. And actually that's the pure logic on opening such trades, so speculative on the pound, because the ones that are really trying to profit from the, in my opinion, bullish potential in the pound are the big investors and speculators. So they do have all the money that they need to open speculative positions and hold them for long. Not necessarily that's the best interest for us retail traders. But again, for the ones that decide and believe, like me, that we could retest the psychological level just to see the price coming back to the 1.33 and eventually closing the gap at the 1.37, just be advised that the minimal stop loss is 200 pip, minimal, and then you have to make your adjustments to consider if to make it wider or not, or even if not wanting to make it wider, you need to consider that the market could even go 400 pips against you. And it makes sense. If the potential profit of this trade is 300 pip, at least you should consider at least a 300 pip of a stop loss. So in this case, it's not the best risk reward. When we opened this latest trade in bullish trade in the cable, it was a very good thing, because actually it was 100 pip stop loss and unlimited potential. At the end, we ended up closing it at 133, and it was open at 129, so 400 pips. So it was a very 1-to-4 risk reward. But now it's not the same. Now it's the best odds here are 1-to-1 using maybe 300 pip stop loss and 300 pip take profit target. The good thing about this trade is that in fact it goes up. The half of your positions will be closed at 133, and the rest of the position will be set into break even and letting it run to the 1.37, and ultimately maybe you could even hold this position for months if the price in fact starts going up. That's what I believe is gonna happen. But again, all this Bank of England, what's going to happen tomorrow will shape a lot of if we can expect the bulls to hold the optimist outlook on pound. I strongly believe that what the Bank of England is most likely to do is not to touch the interest rates at all. I explained a little bit more in today's webinar, because in few words, you reduce or you hike the rates when you have verifiable data. But the Brexit just happened and the market is adapting to anything yet. So it's pure panic. So every single data that you could consider to take such a decision would be distorted. So they need at least one more month to take an accurate decision on interest rates. They could maybe only shrink it 1/4 of a point, just giving confidence to the markets that they are in fact doing something, but in fact is they are adapting to anything. They don't have, we still don't have any information on how Brexit will affect the economy, because in fact that will happen in 2 years. And what the way they make a success or not of Brexit is what's going to be shaping gradually where the UK is heading and where the pound will be heading. So what I believe is that the Bank of England won't touch the interest rates at all. If they do, maybe only 1/4 of a point. If they do really adjust massively the interest rates, I simply don't know what's going to happen to pound. I don't know if it's going to rise or not. It's going to sink another 200, 300, 400 pips. I really don't have enough information to know how the markets will read that. But in my opinion, having more than 1/4 of a point rate cut, it should be excessive for the pound and for the UK economy. They have way more opportunities now, like for example finding refugee and finding a shelter in the United States treasuries. Maybe it would be even a better idea just to cut 1/4 of a point and go and buy treasuries of the United States. But well, I'm not doing UK policy, monetary policy, so I don't know what they're gonna do. So well, just be advised for the ones that decides to go along the 1.3. Yes, the minimal stop loss 200 pips. It would be a wise thing to consider at least 300. So it makes it a 1-to-1 risk reward, and I know that's not the most popular risk reward setup that people are looking for, but I am used to trading that with a decent an acceptable performance and success. So thanks everybody for showing up. I'm just reminding you, just go in the description box. You will see there the links to my previous webinars, so you can go there and check them out, or to subscribe to my webinars, etc., etc. So thanks everybody for showing up, and trade safe, be safe, and bye bye.